to wake you up very early.
No problem.
It's the nature of business. So for the purpose of this meeting, because STL is more of most of the traders we have are still learning how to trade.
Okay.
We will do the questions that I emailed you before, and then we will try and build on the very same questions for the purpose of other invited guests who have more experience.
Right. Okay.
Yeah. So I'll start by introducing the members that we have right now. We have STL members. We have Laura. I can see Ezekiel. I can see Jackie, and the rest will join us. So we can start this webinar. Start with the first question, Carley. What got you into trading, and more specifically commodity trading, and what would you describe as your trading style?
Okay. Well, originally when I first got into this particular business, this isn't what I set out to do. I originally was going to go into stockbrokering. I went to, I was a finance major in college, and I thought being a stockbroker is what I wanted to do. However, towards the end of my college career, I did an internship at a stock brokerage firm, and I absolutely despised it. It was mostly selling mutual funds and basically charging for commission for services that people didn't necessarily need to pay commission for, so it just wasn't for me.
Okay.
Then I stumbled into, there was a commodity brokerage here in town. I stumbled into it and have loved it ever since.
So your commodity, the trading firm, you got right into it straight out of college.
Correct, right. Well, I started at a bigger brokerage firm, and then I went out on my own and started my own brokerage firm about 9 years ago.
Okay, and so far your experience has been great now that you already own your trading firm.
Well,
I suppose.
Anybody that's been around this business, whether you're trading or you're a broker or whatever the case is, there's ups and downs. So there's good days and there's bad days, just like anything else. The thing is about this industry is when it's really good, it's really, really good. But when it's bad, it's really bad. So you have to have a stomach for the roller coaster ride.
Okay, so you bring me to the third question. So we'll just address it right now. Some of the challenges you've experienced in specifically commodity trading, and how you've been able to overcome those challenges over time. How have you done that?
There's constantly unforeseen challenges. We never know. We can't see into the future. So anytime that we recommend a trade to our clients and we're participating, we've done our homework and we feel good about it, but we never know what's around the corner. And so there's always, from time to time, we find ourselves in the wrong place at the wrong time, and that's the nature of what we do, which is we do a lot of option trading or futures trading around our option trading. So we do it in a way that we're not working with stop loss orders or the traditional risk management. We're using options for risk management. So it's a little bit different. So it's not as easy as getting into a trade and oops, I'm stopped out, I'm done. It really doesn't work that way for us because we're hedging with options. We are more inclined to just adjust the trade. If it goes against us, the option is generally hedging our bet enough to where we're making on one end and losing on the other, and then we try to adjust our way out of it. More often than not, it turns out okay in the long run, but it can get hairy in the short run.
Okay, so you use options as your insurance for your client. That's what you're saying.
Sure. Exactly. So for example, in some occasions, if we go long a futures contract, we might buy a put option for protection. That way, our risk is absolutely limited to what we pay for the put option. No matter what happens, we can only lose what we paid for the put option. So it's a little bit different than using a stop in that, our risk is probably going to be somewhat similar, but we're always going to be in the market. If the market goes against us, we have lasting power because we don't have to worry about being stopped out. With the options protecting us, eventually if the market recovers, we'll be there to enjoy it as opposed to being stopped out and watching it recover without us.
Okay, I think that's a good strategy that we might carry along with it with time, because most of us are on forex trading
Hmm.
currencies for now.
Okay,
Yeah.
sure.
So, how much analysis goes into your trading prior before you place your trades, and can you say that your trading is now effortless for the 9 years that you've been trading?
Right. Yeah, I wish I could say it was effortless, but it's absolutely not. In fact, trading is really, really hard. It's not something that comes easy to anybody. I know people that have been trading for a couple of decades, and even for them, it's a challenge. So you can never let your guard down. It's never going to be easy. If
Yes.
it were easy, everybody would do it. But with that said, it takes a considerable amount of analysis to participate in the markets. I mean, forex I know is a little different because the time frames are shorter. You guys are probably using different, mostly technical analysis to get in
Yes.
and out of
Yeah.
markets.
Yeah.
For commodities, like we do the same thing where we're mostly using technical analysis, but we also study market composition. Like there are reports here in the US that tell us how many people are long or short a particular market and what type of traders are long and short. So we can see what the big traders are doing, what the small traders are doing. So we do that sort of analysis. We also look at seasonals. There are patterns that occur almost every year,
Mm-hmm.
seasonal patterns based on growing cycles or manufacturing cycles or whatever it is. And so we pay attention to those as well and incorporate that into our trading.
Okay, and in terms of fundamental analysis, like the ongoing hurricanes like in Miami and Florida, and how they affect, especially with regards to oil, given
Hmm.
the fact that now they have shut down the oil refineries, how would you how is that a major setback to your pricing in terms of your trading at the moment?
Uh, Fortunately, we didn't have a whole lot going on in the energy market when all of this happens. The thing about hurricanes is they're relatively sudden. Like it doesn't feel like it because
Yeah.
when you watch TV, it's like 3 or 4 days. It's coming, it's coming. But the market moves at the very first sign of that hurricane, and so like if you didn't get into it in the very, very, very beginning, then you kind of miss the trade and you miss the boat. Honestly, I've found that events like that, weather events and things that are uncontrollable and somewhat unpredictable, are
Mm-hmm.
really, really hard to trade. So we try to avoid being in markets during those times that are going to be affected by that. The best trades a lot of times are playing it after the fact. So, for example, if gasoline spikes again on this next hurricane, maybe it's a place to actually be a bear, cautiously bearish. But it's
Okay.
really hard to. The volatility is so unpredictable. It's hard to make money on those kinds of things.
So for those particular kinds of, you try and avoid the markets at that particular time, or
We
you you
we
trade in
do. It's
other
right.
derivatives.
Yeah, we're trading other products. We're trading right now. We have euro trades on, so we're trading the euro. We're trading treasuries. We are trading the grains and the meats, but
Okay.
we don't have anything on in the energies just because it's just not. It's a tough arena to play right now, especially because we do a lot of option trading. And right now, everybody and their dog is trying to buy options in crude oil and natural gas, and so the options are overpriced. It's really just the odds of success are not very high there at this moment.
Okay. So like you have your own analysis team that I believe updates you and advises you on which markets to trade and which ones to avoid, given your
Uh,
schedule, of course.
right. Well, actually, believe it or not, I do most of it myself. I really don't trust anybody. So I do subscribe to a lot of services, newsletters and seasonal services and things like
Okay.
that. So I can get information from a lot of different places. But ultimately, I'm making most of the decisions in regard to that.
Okay, so we'll just move on to the next question. What was your first experience like making your first profit and also your first loss, and all what did you learn from that kind of movement? I'm sure you remember
Okay.
your first profits and your
Sure.
first big loss.
Surprisingly, I don't specifically remember my very first win or loss, and probably because in the very beginning I didn't have any skin in the game. I was a broker new into the business, so it was other people's money that I was I was helping them trade. So, I mean, I remember all kinds of good and bad stories. The worst experience I had was when I first started in the business, and I agreed to trade an account for my parents, thinking that it wouldn't be any more stressful than trading for anybody else. But it's absolutely not true. Trading for your family is actually the worst thing you
What
could
was
try
that
to do.
like?
It was a nightmare. At first, it was fun because I doubled their account, and I thought I knew more than everybody else did, and I didn't. I was probably only a year or two into the business, and I hadn't learned the tough lessons that come along with being in this business. So it didn't end well, and it was. So I would say that's probably my first real profit and loss was trading for my parents, and it was extremely emotional. It's hard to explain. I mean, I can lose my money and I don't think twice about it. It's no big deal. But for some reason, losing my family's money was not. It was just not enjoyable. It was terrible.
So how
So
did
don't
you
do that.
how did you break the news to your folks that you lost
Uh,
the money?
well, it was a tough phone call. So, and honestly, they took it pretty well because they knew going in what we were doing, and they knew it was speculating, and they could lose it. So they weren't that surprised, or they weren't upset. But I personally was upset for some reason. It just didn't sit well with me. So
Okay.
take my advice. Really, do not trade for your family. It's not worth it.
Yeah. So okay, fine. In terms of trading for other people, how much, for example, if we would want STL members would probably graduate into asset fund management, what are the credentials that we would be looking at for commodity trading? Certifications and qualifications for that
Okay.
particular line of career.
Uh, Believe it or not, I mean, honestly, I think it depends on which country you're in. So every country has like a little different idea of what's necessary. In the United States, the barrier to entry in the commodity business is actually relatively low, and I hate to say that, but it is. I mean, I have a degree in finance and accounting, so I mean, I'm college educated. However, that's not necessary. You can
Yeah.
actually get into this business without any education at all, which is totally fine. Some of the best traders I know never went to college, so it's not. It doesn't matter
Unfortunately.
one way or the other. Yeah. So, but um, in this country, all you really have to do is take a proficiency exam. It's administered by the National Futures Association, and it's
Yes.
you pay. I can't remember the cost, but I think it's a couple $100 to take the exam. And if you get a 70%, you're in the business. You're done. I mean, assuming someone will hire you, or
Okay.
but other than that, there's not much you have to do. You just have to take a test and pass it.
What about the experience? They do not factor in any experience that you've had trading for yourself
Um,
or
Honestly, it depends on the side of the business you want to get into. If you want to be a trader, absolutely, they're going to want to see experience, and that's really
yeah.
hard to do because they want to see live trading experience with real money. Nobody cares what anybody did at a paper trading account,
Yeah.
and it's hard to get the capital needed to show what you can do, and so it's a challenge for a lot of traders. If you want to get into the brokerage side of the business, they're really, honestly, it's just a matter of having the capital to start your own brokerage firm, kind of like what we did, and getting started. So there's not a big hurdle. However, it's very, very difficult to make a living on the brokerage side. You have to have a substantial number of clients, and it takes a long time. Like, for example, just to give you an idea,
Yeah.
I've had to rebuild my brokerage business 3 times. Once because I left the brokerage firm I originally started with, and when you leave in the brokerage industry, you have a non-compete agreement, so you can't take any of our clients. You have to just start from scratch. And then the other time was because one of the brokerage firms the only brokerage firm that we were placing all of our clients in went bankrupt due to fraud, and so we lost everything and we were wiped out. That will probably
Sorry.
never happen again because the U.S. changed a lot of their compliance rules, so I doubt that'll happen again. But unfortunately, that doesn't help us. So anyway, the bottom line is I had to restart the business 3 times, and each time I had to restart, it took me 6 months to build a book of business to even have any money coming in. So I worked basically for free for 6 months each time. So it's really hard to do.
Okay, and in terms of the capital requirements and the licensing from your regulatory bodies,
Hmm.
I know a lot of the commodity trading is capital intensive. Um, So how have you managed to grow your business despite the three times of trying and
Mm,
readjusting your brokers and all that, like
right.
reinvesting in your business?
It's, you know what, the capital requirements depend on how you're set up. If you want to be purely independent on your own, then the capital requirements are decently steep. So for example, it depends on the size and that sort of thing, but you can probably assume about 70 to 80,000 in capital requirements
Okay.
to start a mini IB, like what we've done. Um, or you could become a branch of some other already existing, and then the capital requirements are nearly zero, which is actually kind of what we've done each time.
Okay.
So it just depends on how you go about it.
And how have you managed to like manage your investors' expectations given the risky nature of and the market uncertainty, and they still expect returns on their investments?
We tend to acquire most of our clients via marketing through we write books, we write articles, we do
Yeah.
webinars, things like that. Within all of that material, all that educational material that we put out, we make sure that we are very upfront about the risks. So most of our clients know from the get-go exactly what they're getting into, exactly what the worst case scenario might be, and that sort of thing. So we like to make sure that all of our educational material prepares them for what they need, to expect.
Okay. So they already have like an idea about the leverage and how it can work against them. Sorry.
Sure.
Um,
Absolutely, yeah. We really try to hammer home on that. And make sure that everybody knows that there's no free lunch, and it can, if you're not managing your leverage and your risk, it can get really, really painful.
okay. So like you have a minimum timeline with which they usually expect their returns. Do you like hold their money for I don't know how many months or 1 year, or you give them the monthly returns based on your performance? Um,
Well, the way most of our clients are generally making their own decisions. So we give them ideas, like we'll say, here's what we think the market might do. Here's our recommendation. We give them very specific recommendations, and then it's up to them to decide whether they want to participate or not. So they are ultimately making their own decision in most cases.
okay.
So we don't really tell people to expect anything. I mean, ideally, obviously, we want to make money, and our goal is roughly, ideally, we want to make somewhere around 2 to 4% a month is our goal. But the thing about trading is sometimes you're going to make a lot more than that, and sometimes you're going to lose. And
Yeah.
hopefully, in the end, it balances out. That's the idea.
As long as your winning trades are more than that you're losing trades, then that's
Right.
fine. Yeah.
Correct. Right.
Okay. How would you like describe your commodity market prices and how they're quoted and how they change in various market conditions in terms of seasonality?
Okay. Um, Commodities are a little more complex than most markets because each commodity has a different contract size, and therefore it's quoted differently, and it has a different point value. So it's one of those things that you really, it's kind of hard to grasp from the outside. Once you start trading commodities, it'll come easy to you because you just get used to it. But it is difficult in the beginning to get used to. For example, in crude oil, every dollar crude oil makes or loses, a futures trader makes or loses $1,000. But in a market like corn or soybeans, every dollar the market goes up or down, a trader will make or lose $5,000. So you can see that there's really no uniformity between each
Okay.
market. It's kind of complicated.
Okay.
And seasonal patterns. I mean, there are various sources on the internet that you can subscribe to for seasonal patterns. I personally like MRCI. I think they offer a free trial on their website. It's mrci.com, I believe. And they'll give you basically seasonal charts to tell you what the market's done over the last 15 years or 30 years, whichever you want to look at. And they also give specific recommendations. For example, their machines will pick out data points where they'll say if you buy on this date and you sell on this date, you've had an 88% chance of winning over the last 15 years. So I like that service. 15 years.
Okay. So Okay, I got that. I just need to clarify one more issue about the fundamentals.
Sure.
You said that you really don't rely on most news to do with weather and that kind of stuff. But how about the geopolitics? Like in the case of the Trump's drama with
Hmm.
North Korea, and given
Right.
that China is a heavy commodity buyer, so
Sure.
how does the political decision
Hmm.
in North Korea and in the United States affect the the I don't know if you also do currencies, the safer havens, the Japanese yen and the yuan. Does that have any effect on your commodity trading?
Absolutely, yeah. Okay, so we do. By the way, we do trade currencies. We do offer forex trading, but I honestly recommend currency futures. It's
Okay.
just where I'm a little more comfortable. But yeah, we do currency trading, and the currency markets have a big impact on commodity pricing, especially like the commodities that we're trading are priced in dollars. And honestly, most commodities around the world are priced in dollars, particularly
Yeah.
crude oil.
Okay.
But with that said, so when the dollar goes up, in general, commodities tend to go lower, and then when the dollar goes lower, commodities tend to go higher. It doesn't always work that perfectly. I mean, right now the dollar's been collapsing, and commodities haven't really reacted. I mean, gold has, but some of the others haven't. So it depends on the situation, but currencies do play a big part. And as far as fundamentals, I don't completely ignore them by any means. I would say I put about 20% of my analysis into fundamentals just so I can get the big picture of what might be occurring in the next couple of months or so. And you definitely, the problem with fundamentals is the market takes
A little
sometimes,
bit of some time to
yeah,
readjust.
exactly. Sometimes it takes a little while to actually be incorporated into the market, and there's all this, people panic first and they overreact, and then so um, for what we're doing, because it's leveraged and it's shorter term, our most of our recommendations are only meant to be a couple of weeks or so. So fundamentals will play a part in the big picture, but if you're talking about what happens in the next week or two, I think fundamentals aren't quite as helpful as some of the other analysis methods.
So you would consider yourself more of a chartist and a technical analysis kind of gal, trader?
Yes, absolutely.
Okay. So, what would you like recommend? I know you've done 4 books. You can also talk about your books, but besides your book, what would you recommend as your best trade and for commodities for newbies, most especially most
Oh, okay.
newbies? Yeah.
Um, So my latest book, it's called Higher Probability Commodity Trading, and in that book I talk about, there's a whole chapter dedicated to trading the mini commodity futures and the micro commodity futures, and I think that's a great place for beginning traders, because it's a lot like, you guys are, if you're trading forex, you know how the micros and the minis work, the really
Yeah.
small. So it's like that. In commodities, there are contracts that are very small like that. So you're trading and it's real money, but you're not going to make or lose a whole lot of money. So it's kind of like paper trading with a little bit of reality involved. And so I'm a big fan of that for beginning traders. I think it's just a great way to get familiar with the markets and how they move. And because a lot of people will paper trade for years and years, and they think that they're doing themselves good. But honestly, in my opinion, paper trading,
It's a
at least
waste
in
of time.
commodities, yeah, I mean, maybe for maybe a month or so, just to get familiar with the symbols and the platform and that sort of thing. But beyond that, it really doesn't do a lot of good, because you're not experiencing the emotions, and that's really where the people make or lose money, is their emotions.
Yeah, we also advise our clients to demo trade for at least 3 to 6 months for them to at least have an idea of their
Sure.
trading style, and then that way they can go live with a
Yeah,
trading account.
I think that's reasonable. That's not a definitely reasonable. I've run across people that have paper traded for 10 years, and then and they wonder, and then they go live and they lose money and they wonder why. But it's just a whole different ball game.
Okay, now we will take some questions from the team. If there's any one of you who has a question for Carly, now is the time to ask. Laura, Tony, Ezekiel. Okay.
No questions? All
No,
right.
yeah, no questions. Thank you so
All right.
much, Carly, for coming on board. I think we would
You're
love
welcome.
to have you in future when we have more experienced traders. One
Sure.
of our trading partner and a few other guys. So we hope that we can also have that session in future. Thank you.
Absolutely. Thanks for having me. You're
Yeah,
welcome.
thank you for speaking to us.
No problem. Good luck, everybody.
Okay, bye.